Budget Committee will come to order. It is still 9:30 a.m. I'm Dan Strauss, Chair of the committee. I have been notified that Councilmember Saka is still on the bus and will join us shortly, as well. I know Councilmember Morales stepped out just briefly a second ago, and she'll be right back. With that, I'm going to try to stall just a minute. And thank you all for being here. Will the clerk please call the roll?
Councilmember Morales.
Here.
Council President Nelson.
Present.
Councilmember Rivera.
Present.
Councilmember Wu.
Present.
Councilmember Hollingsworth.
Here.
Councilmember Kettle.
Here.
And Chair Strauss.
I am present, and if you could call Councilmember Moore one more time.
Councilmember Moore.
Present.
Wonderful.
8 present.
Thank you. Thank you all for being present today. I know that we have some folks that either need to leave at 11 or exactly at 11:30, and so colleagues, I am going to try to keep us on schedule as usual. We have 3 items on the agenda today, presentations, part of the Select Budget Series. Today's presentations are on the restricted revenues, and so we've been talking a lot about the fact that our general fund is what has the structural deficit at this point, the structural gap, and restricted revenues are adjacent to the general fund in the sense that we have put our own restrictions on these funds. So they're not purely general fund, but we do have control over them. We'll then have a presentation about the work that occurred last year from the Revenue Stabilization Work Group, an overview of their work, as well as we'll wrap up with a summary of the initial budget review. So this will wrap up part of our Select Budget Series, this initial budget review, which will then lead us getting ready for the August forecast, as well as the in-depth analysis that each of us are doing in our own offices with the budget book that central staff has presented, and then we'll be going into the fall budget session. Before we begin, if there's no objection, the agenda will be adopted. Hearing no objection, the agenda is adopted. We will move into a hybrid public comment period. Clerk, do we have anyone signed up online or in person?
We do not.
Colleagues, I will tell you that this is rare, so let's love it for today. Seeing as we have no speakers remotely or physically present, the public comment period is now open and is now closed. We will move on to the first agenda item, and Deputy Director Panucci and Tom, if you want to join us, please feel free to. Clerk, will you please read the short title into the record?
Agenda item 1, Revenue Restrictions Overview for Briefing and Discussion.
And I do see Rob Saka on remotely. It might be his Dias computer. It is. Okay, thank you. Deputy Director and Tom, at your pleasure, please.
Good morning, council members. I'm Ali Panucci of your central staff. Tom and I will be here together for the 3 presentations, but on this first one, Tom will be taking the lead, so I'll pass it over to him.
Good morning, Chair Strauss, members of the committee. Tom Meixel with central staff. And I'll just start with the presentation that we have prepared for you. This first presentation will be covering it'll be an overview of revenue restrictions in the budget. And I can sense that the excitement about discussing governmental accounting terms is palpable, so I will jump right in. Next slide. So to kind of focus the discussion, this outline will take us through the restrictions to revenues in the budget, kind of the form that they take, how the city manages these restrictions, then using that kind of intelligence, how those restrictions are mapped in the budget, then kind of drilling down into those places where there are fewer restrictions and or the restrictions are locally imposed, and then offer some options, caveats to consider when considering those options, and then key takeaways from the presentation.
Thank you. And Tom and colleagues, feel free to ask questions as we go. If we do get close to time, I'll switch the order to say, can we hold them to the end? Take it away.
Okay, so to kind of start, we'll kind of start at the top. And there are really two kind of broad ways that revenues are restricted, just in the state of Washington in general, but specifically in terms of our budget. One is a restriction on how revenues actually can be raised. So the first thing to understand is that cities don't have any natural taxing power. That taxing power is given through the Constitution to the state legislature, which then provides cities with the power to tax. And that's in Article 11, Section 12 of the Constitution, should you care to look at it. There are really two kind of main categories of taxes in the state. One is property taxes, and then one, when you think about property taxes and having kind of working from the foundation of yesterday's presentation from Director Noble is helpful because you've already heard about the lay of the land with regards to property tax restrictions. One concept that did not come up but is important is this concept of uniformity. So that's essentially saying that all property has to be treated equally in the state of Washington. So that kind of pervades all taxation concepts, but very specifically property taxes. Another type of taxation authority that we have is excise taxation. So this is basically, I kind of think about it as anything where there's a receipt. So if there's kind of an exchange, then there's an excise tax can be applied. And so, like really case of high-level examples, sales taxes, B&O taxes, utility taxes, REIT, those are some examples of excise taxes. And all of those taxes are provided for in the state, in state law. There is also kind of a broad grant of excise taxation authority that is applied in state law as well. So the ones I mentioned previously are actually specifically enumerated in state law that we can use those, but we also have this kind of broad ability to levy excise taxes, and we have. So I believe it's in 2016 or so, there was a firearms and ammunitions tax that was passed. That was actually challenged in the courts, and we prevailed, so that kind of affirmed our taxation authority for that. And then more recently, the payroll expense tax, similarly passed under that broad authority, challenged in the courts, upheld by the Court of Appeals. So that's kind of the two categories of tax that we are allowed to use in our budget.
Thank you, Tom. And I just want to state for the record, Councilmember Saka has arrived. And Councilmember Saka, I was waiting to share the good news of Seattle today. Our sports teams had a lot of winning last night. Our winningest teams, Storm won. Our beloved Mariners won. And yes, Ballard FC, 3-0 last night. And Councilmember Saka, you didn't tell me that my friends Peter and Dorian are on your coaching staff over there on West Seattle Junction. So my love just got bigger for your team.
Well, yeah, go West Seattle Junction FC, and yes, go Seattle Sports. Thank you, Mr. Chair.
Yep. And Tom, I just want to come back to the presentation and saying that the taxes that we have decided to pursue in our city, we have found to be standing on strong legal ground, which is why we've won these court challenges. And I know that there are some other examples that will come in the revenue stabilization work group that don't stand on such firm ground, most likely because of this uniformity clause that we can't charge for one space a different rate than another or something to that degree. Is that essentially where we're at today?
That is correct, and yes, certainly the revenue. There are some discussions and concept in the revenue stabilization work group that may have not be necessarily in alignment with that uniformity clause, and not to give a spoiler alert, but that's to come. So if we could look at the next slide. So this, not to get too hung up, I did put a lot of rates and information in here, but these are kind of the high level look of the actual maximum tax rates that we are allowed in the various taxes that are provided for in the state. So again, yesterday's presentation covered this really well, but there is a $3.60 per $1,000 of assessed value cap on our local property taxes, and then we're limited on how much those can grow to 1% per year plus value of new construction. Sales taxes, we're limited to 1%, which is a basic and optional rate. Two kind of different sides of that rate. One is 0.5%, that's a basic rate, and then up to an additional 0.5%, which we do avail ourselves of the full 0.5% in the optional rate. B&O tax, 0.2% is the maximum rate. However, as you can see in the footnote at the bottom of this slide, our rate is actually slightly higher than that because when the law passed around 1984, there was a provision for any tax rate that was already higher than that cap could stay at a higher rate and in fact could be increased up to 10%, and when we have done that. So we're at the max rate there. And not to go really dwell too much on these rates, but these are the kind of the areas where we have tax authority that's specifically prescribed by the state, and we use it at those maximum rates. And then finally, fees and charges. So I've been talking a lot about taxes, but you'll see a bit later, a lot of our budget is funded from fees and charges. And the key provision there is those fees and charges are intended to basically pay for the cost of providing service. So they're kind of a cost recovery mechanism, not a generate revenue to use for some other purpose, kind of the public good. And that's kind of a key distinction that is really important to understanding the restrictions, because it really drives a lot of the discussion around restricted funds in the budget.
And Tom, before we move on there, just taking a quick look at REIT 1 and 2, I'm not going to spend time here on the dais talking about it. The way that the city uses it is it's pretty much the same. There are some nuances regarding programming or strictly capital. And colleagues, if you're interested in finding out more, I'd say chat with Tom offline. Regarding fees and charges, just understanding this, when we look at cost recovery, I'll use a pottery class at a community center as an example. For fee recovery, we could account for all of the building costs, everything that goes into operating that community center that allows for that pottery class. So we could, in a sense, really have a high level of financial need to recover in a cost-wise if we accounted it that way. However, what we've found in the past when we raised the fees on especially community center programming and swim lessons from the Parks Department or others is that it creates a lot of turmoil in our community because there's a lot of people that rely on those classes. Is my understanding correct that we could account for everything that goes into that community center, and if it's not appropriate for you to speak about the blowback that the city has gotten in the past for raising fees on these programs, it's fine, but can you share a little bit more there?
Yes, absolutely. So we are limited at full cost recovery, though policy decisions to levy a fee at a lower than cost recovery, which I believe is what we're talking about for policy reasons, perfectly allowed and maybe favored in select circumstances. But yes, indeed, if there is an element of the building cost or overhead from other departments, all of that can be included in the kind of calculation of what the cost of providing that service is. So that's kind of one of the areas where you can take a look at it and determine whether or not maybe we are not recovering the full cost and we want to make a different decision, or perhaps because of inflation, the fee hasn't kept pace with the costs. So there is some element of decision to be made there based on policy. But the limit is it cannot exceed. The minute that it exceeds the full cost, it sort of becomes a tax, and it becomes more likely to be challenged at the rate that it is.
Thank you for the question, Chair Strauss. I would just add, periodically, I think in one of the presentations as one of the tools I had highlighted, looking at our fees and charges and whether or not they're achieving cost recovery is a good exercise to periodically go through. But there has been, as I think Chair Strauss is highlighting, there are policy reasons why in the past the city has looked at those fees and charges and decided not to increase them to achieve full recovery because it would make the access to those services cost prohibitive for large portions of our community and that type of thing. So there are policy options to weigh and balance, but I still think it's good practice to periodically review those and confirm that decision still makes sense moving forward in the context of today's, whatever is going on in that moment.
And that's the part. My Parks Department example is different than, for instance, our permitting example, where our permitting staff are funded by the revenues in which they receive. And in Councilmember Morales's Land Use Committee later today, reviewing the permit audit, there's going to be some more information about this as well, about how we are funding the staff to review and issue our permits. So there's a spectrum, is all I'm saying.
Chair Strauss?
Yes, please.
Quick question. So basically you're saying this is the equivalent of the dilemma that Costco goes through regarding the cost of their hot dog. Do they stay at $1.50 or do they go higher? So.
And if it's for a permit, then it's higher. Yeah. Thank you. Take it away.
Okay. So those are kind of some of the limits on how we can raise revenue. Next piece of the puzzle is what the kind of restrictions on how those revenues can be used. So there are a variety of restrictions that can apply to how revenues can be used. Kind of from the top, the state can actually limit the uses. A few examples, not exhaustive. For example, the commercial parking tax can only be used for transportation purposes, as prescribed by the state. Similarly, REIT 1 and REIT 2 revenues can only be used for capital purposes. So there is some distinction between REIT 1 and REIT 2 in terms of what type of capital they can be used for. However, that restriction is applied by the state. Grants and service agreements, so we get those from the state, from the federal government, from other external funding agencies. Those come with strings attached, so we receive them in the budget and they're for a specific purpose in most cases. There were during the pandemic, there were some very large amounts of funds from the American Rescue Plan Act that came with less specific restrictions, but even those funds were kind of restricted in how they can be used to deal with COVID emergency needs. So that's kind of a way where we get the money and it's for a specific thing that's tied with the funding agreement. Permits and license fees. So these are restricted to recovering the cost of the regulated activity. So all the work that goes into doing that regulation. And so now those are the external restrictions, I guess. The next two are more our own internal or locally imposed restrictions. So voted ballots. So we have, again, coming off of yesterday's presentation, quite a few voted levies, given the change to the property tax structure in the from Initiative 747. We now rely on quite a few voted levies, and each time one of those levies is adopted by the public, it includes some level of indication of what those funds are to be used for. And so those are imposed by the voters, but they usually come with time constraints, time limits, and different decisions can be made in the future. So restricted for a time, and then subject to review. Then finally, and this is where later on we'll get to kind of the discussion of where there's options, are the city ordinances. And so these are the cases where the city has imposed a tax in most cases, or in fact all cases, and as part of that tax, there is some earmarking of how those monies can be used. And so those are decisions that can be changed. And we'll go into kind of the trade-offs and caveats to consider in that, but it is an area where there's a restriction that we have that does control how funds are allocated in the budget. But with an ordinance change, different decisions can be made with trade-offs. So I'll move to kind of how we manage these restrictions. So this is where we get into the fund governmental accounting stuff, but it's pretty light and high level. So the city staff, budget office of finance, we rely on kind of a system of accounts referred to as a general ledger. So when you hear general ledger, that's basically this sort of structure that guides and helps us map the restrictions, the various meeting of the resources with the needs in the budget. And so at a high level, you have the fund, and you've heard a lot about the general fund, but there are quite a few other funds that are involved in the city budget as well. And within each one of these funds is a set of specific accounts, each of which comes with its own kind of flavor of restriction. It's required by state law that we account this way. It's also a standard from the Governmental Accounting Standards Board, which kind of accreditates our budget to ensure that we're in line with governmental accounting standards. So what this does, as opposed, at a very simplistic level, it helps us manage how the restrictions are imposed in the budget and to ensure that we don't violate them and run afoul of state law.
And Tom, before you move on to the next slide, but I'll let you wrap. Anything else on this?
Nothing else to add.
And so right now, it's my understanding that the revenues from Jumpstart go into a fund. And then in the past, when we have allowed Jumpstart to supplement the general fund, we pull those funds out of there. And then from the Jumpstart fund, that's how we fund the programs that are outlined within the ordinance. Is that generally correct?
That is correct. Yes.
And that's different than a few years ago when I was doing my tree protection work. I found that the penalties from illegal tree cutting were just being deposited back into the general fund. And we worked together with Yolanda Ho to create, I believe it was an account or a line. Can you tell me the difference between the Jumpstart Fund and that tree account that we created?
Absolutely. So I'm not really familiar with the history, but having an account within the general fund can be managed in that way. It's more difficult to do so. Basically, it's because you have this whole fund that's supposed to be unrestricted, but there are pieces of it that we want to ensure are used for a specific purpose. Versus the payroll expense tax fund, the Jumpstart Fund, it's easier to see the level of restriction because it is within the boundaries of the fund. Not to say that cannot be done that way. And in fact, depending on the size of the revenue, there may have been a decision to, instead of creating its own fund, manage it at the account level. I mean, that's not against the rules, so to say. However, having something in its own fund makes it easier and makes it more clear to see how the restrictions are being managed. But there is a difference between the two.
And I would just add, so there are trade-offs, and so with different sort of sizes of funds, you want to consider those trade-offs. So the tree account, for lack of a better word, I don't think was anticipated to generate the amount of money that the Jumpstart payroll expense tax generates. And so there are some administrative burdens for our finance department and our budget office and sort of creating new funds and managing them. So that is always sort of the balance and conversation that we are having with the executive branch, because creating a separate fund does provide better transparency and visibility on how those funds are being raised and used in the budget. It is just, how we budget at the budget control level. It comes out that signals what fund, so you can see really clearly what's coming out of the Jumpstart Fund. To drill down to how much money the tree regulations are raising and where that money is going would require some extra layers of analysis and review and isn't as quickly visible. But again, those administrative burdens are real, and so consider the trade-offs as you make decisions in that space.
And Council President, I see I'm in his last line here, which is when I initially requested that tree account, I got a lot of pushback because the penalties were not raising a lot of funds, and I knew that was before we passed the tree protection ordinance, which increased the fees, and we're already seeing more funds generated from there. It creates more transparency, but it is harder to manage. Council President.
Thank you. Allie will know well that this is a point of discussion between us around transparency of restricted funds, having them be their own fund. Because they do not, so for example, the Jumpstart Fund, let's say it's generating $300 million in revenue. If that were, that fund is used for a lot of expenses in OED and housing, et cetera, across the board. And so these are the expenditures really they help a lot of our departments and a lot of our needs. So, but they are not seen, that source of revenue is not seen in the line that shows revenue on the charts. And so when you look at revenue versus expenses, there's that big gap. I think it's now 258 million. If Jumpstart was factored in that, which is a source of money that we use for a lot of things, that gap would not, would not be apparent. And so there is a transparency in terms of how you figure all of the expenses within a fund. Yes, I completely agree that that is really important. I have also said that it's not, it's hard to understand the revenues and the resources that the city has when those funds are on their own and are not visible to the public. Sweetened beverage tax, much, much smaller. Other, restricted funds as well. So I see accountability or transparency. It would be great if the public could see both lines, and I understand that the expenses that come out of the Jumpstart Fund are also not figured into that expense line on the thing. But when it comes to understanding what is our budget situation overall, that is something that I've been talking about.
I think what I would just clarify there is the chart you're talking about is a specific chart we have produced over the years specific to the general fund. And so neither the revenues or the expenditures related to Jumpstart are showing up there. If we had, if that was all merged together using current current law, the gap would not change. That calculation would not change because right now, current law says that future expenditures are not to backfill sort of other general fund expenses. And so until and unless those policies are changed, that merging those two numbers together wouldn't impact the projected issue. But for example, if the council chose to modify the Jumpstart Fund policies to allow the higher than anticipated in 2020 revenues as an ongoing general fund use, so it was a by law assumed transfer, you would see that gap start to close in the out years, because right now we're projecting, I think, about $180 million of Jumpstart revenue that is higher. So the projected deficit for 2025 in the general fund, that is somewhere around 250, 264, somewhere around there, would narrow by about $180 million, but wouldn't close completely.
Right. And for the record, I want everybody to recognize that I am not suggesting that we put it all in one pot. I'm simply saying that I think it's good for the city to show all the resources that we have at our disposal as we go forward to figure out how we're going to deal with the deficit. But it is not something that I am recommending, and I recognize that the Finance Committee has recommended against that as well. So I am in agreement with the status quo.
So, questions? Just pause for a second. Good?
Yeah,
Okay.
yeah, keep rolling.
So, kind of drilling into the management of the restrictions, we'll just talk about kind of the categorization of various accounts that go into these funds and how the restrictions at the account level sort of drive how the restrictions are managed at the fund level based on where each one of these funds receives its monies. So again, one category is intergovernmental. So these are grants. These need to be managed and accounted for subject to the grant or service agreement by which we're receiving those funds. User fees and charges, and this a big category of this, which you'll see later, is utility ratepayer funds. So those are very restricted because they're for the purpose of receiving water service and water itself, and electricity, and solid waste. License and permits fees are restricted to administrative cost recovery. So think building permits and zoning permits, things like that. For other financing sources, like bonds and transfers are restricted. So bonds are restricted for use for capital, and transfers are really just kind of a flow of funds from one fund to the other. And so when a transfer is budgeted, it's usually for a specific purpose. Miscellaneous, so now we're getting into the places where the restrictions are maybe a little bit looser. So miscellaneous, a large category there is interest. So in general, interest earnings are credited to the fund that earns them, because if a fund has restricted money in it and you earn interest on it, the kind of interest becomes restricted in its own right. And then payroll contributions. So a lot of the money that flows in this category is things like retirement contributions or workers' comp or things like that, which are kind of highly restricted for a specific purpose. And then finally, taxes. So you'll see the theme of this is a lot of that taxes are really the unrestricted category. However, there are exceptions. As I indicated, sometimes the state applies restrictions, and as we do, sometimes the city applies restrictions as well. So that kind of just gives a really high-level flavor of the categories of revenue received and how much of it is restricted. That really taxes all those places where there are fewer restrictions. And I'll just close this slide with the one kind of statement. All that being said, all money received is restricted for a public purpose. And so that's kind of that gift of public funds clause that you are likely familiar with.
Why we own Benaroya Hall and rent it out. Is that generally correct? Sorry, I took us down a side alley. Councilmember Moore has a real question.
So maybe a few slides back, but my question is the Mandatory Housing Affordability Act. So when there's in lieu funds, I'm speak into my mic. Here we go. The Mandatory Housing Affordability Act, the in lieu monies, where does that go? Is that a separate fund? Is that a restricted fund?
I do believe it's a restricted fund because those have a purpose defined in ordinance. I don't know what fund they specifically go into, though.
I believe that is one of the sources of funds in the low-income housing fund, but we can double check that. But it is restricted, and the restricted uses are to pay for capital investments in affordable housing. So I think it's in the low-income housing fund, but we can double check and follow up with you on that.
Okay, that'd be great. Thank you.
Good question. Seeing no other questions on this slide, Tom, back to you.
So the third of the 5 steps of restrictions, this is a graphical view of the account categories to show how much we get from these various categories. So you'll see I've shaded the things that are most restricted with this kind of anywhere between blue and, I'm not sure what that color is, blue, green, something, aqua, I guess. Those are kind of your restricted categories, the largest of which is charges for goods and services, which the bulk of that is going to be the ratepayer dollars, which are restricted. And then the unrestricted categories are in fees and fines, which are unrestricted by the state, but we can apply some restrictions to them locally. And then the largest, of course, is taxes. And the one largest place where we impose our own local restriction is the payroll expense tax, which the Jumpstart payroll expense tax, which we'll talk about in a few slides from now. And these numbers are 2024 adopted budget numbers. It's just for the sake of display to give you a sense of proportional chunks of the budget that each one of these categories brings. So next slide.
Tom, just before we move on, these are all funds that we have. These are all revenues. And so kind of piggybacking off of Council President, when we look at this, these are all of the revenues we receive and all of the expenditures that we use. This budget balances, and we are legally required to make our budget balance each year. And so these are all of our funds. We use these funds every year, and we balance our budget. But then the question that we're having to focus on is the general fund specifically.
Precisely. So this is the 2024 adopted budget that was part of the balanced 2024 adopted. It's not the expenditures, but the expenditures drive from the source in a way, particularly through that management of funds, where we receive the revenue at a high level, kind of in the general ledger from all these categories, and then accounting puts them in the proper place, and then they're available for spending through the fund structure, which we'll talk about next.
And I think, just at a high level, when you're looking at this pie chart, the I don't know if that's rust colored, the unrestricted category, where the label this category includes the payroll expense tax, the bulk of that is our general fund, right? So that is really the slice of the pie where there is most local control. So that $2.3 billion slice, about 1.8 of it is general fund, and then another large chunk is the Jumpstart Fund, and then some of our other smaller funds that Tom will talk about, like sweet and beverage tax. But that is really where the council has the most authority to make decisions, different decisions year to year on how to use those funds, some of which might require amending policy.
Yeah. And if I could just add to that, it's not precisely that it's the general fund, but it's general fund, like the heavy hitters for the general fund, B&O tax, sales tax are in that, that Rust category. And also all of the local levies are going to be in there as well too. And then Jumpstart, payroll expense tax, and a few smaller taxes. So hopefully you'll see with the next kind of presentation how we transition from the accounts to the funds, and then you can like think about it at the fund level of how to manage and understand choices about the restrictions. So let's, if we could.
Council President?
You said that the local levies are in that rust-colored, most free to use as you will bucket, but isn't that set by ballot measure?
Yes, precisely, and I think as the final bullet, I tried to tease out the fact that they're largely unrestricted, but there are some restricted categories. So it's a mixed bag.
Okay.
We manage that mixed bag with the fund structure, specifically through calling them special revenue funds, because those levies are for a specific purpose according to the ballot that put them in place.
Yeah, and I think the reason why we say where council has the most control, as you all are debating the current transportation levy, right? Like you are considering how and in what ways you want to put restrictions on how those funds can be spent. So what is the question you're putting out to the voters? So Chair Saka is, facilitating those conversations of balancing various priorities and how to manage that in the future.
Okay. So now we're going to move, so we've kind of covered the revenue, so the specific revenue accounts, and then now we'll talk about the funds that these revenues go into. And so because this is the kind of highest level that these resources are managed. So there are 7 major fund categories. Generally, basically organized from more restrictive to less, but really it's kind of the top 5 are all very restricted. Special revenues are restricted, but there are options. And then the general fund, those resources are available for any legal public purpose. So fiduciary funds are things that are managed in a trustee capacity. So you can think about these like the retirement fund, where those dollars are from city and employee contributions to pay for the defined benefit retirement program that we have at the city. So enterprise funds, so these are things like the utilities and SDCI, where one way to think about this is they're managed like a business. So business enterprise, utilities, SDCI, very restricted funds. Internal service funds, so this, you can think about FAS and Seattle IT and SDHR. These are kind of internal city businesses, so it's kind of the same concept, where these monies are managed for a specific purpose, to provide services to other city departments. Debt service funds are managed to pay debt. Capital projects funds are restricted for use for capital projects. And then special revenue funds are things with a specific public purpose that's attached to the revenue source. And so we create a fund to manage them that way. And then the general fund. And there's actually a few different funds that are in the general fund category, and I'll talk about that in a bit. So any questions? If there are none, I'll move to the final slide of the kind of our accounting class here. So this is, again, the total city, all city revenues. So it's kind of reformatting the kind of account level view that we saw earlier into the fund level view. And you can see the types of funds that we have and how much of each different category we have in the city budget. The largest category is the enterprise fund, so our utilities are much of the budget, so a big chunk of the budget is for utilities, very restricted. The funds that are classified as general fund, and so this is where I said there are kind of a few different funds. It includes the general fund, the judgment and claims fund, the Office of Labor Standards Fund, and the sweetened beverage tax fund. And then special revenue funds, it's about 27% of the total budget. And this includes all the levy funds. So the Move Seattle Levy, the Low Income Housing Fund, the Families in Education Preschool Promise Fund. And then finally, some excise tax, fines, fees, and franchise-supported funds. So these are the special revenue funds, like the Jumpstart Fund, the Arts and Culture Fund, and a few others as listed here. And so this shows kind of from all the different accounts that we receive, this is how we manage them in broad funds. And within each one of these categories, there are, of course, specifically named funds that are included within. So, for example, the special revenue fund will include the transportation fund and the parks fund and a list. And in fact, we've provided as an appendix at the end of this presentation kind of something that gives you a look of each department and what their revenues are in terms of this fund structure, just as a reference.
Thanks, Tom. Council President.
How much is in the OLS fund?
Gosh, I actually do have.
I'm on page 134 of the budget binder, and it's 6.6, but I don't know if that's referring to that. It's just an appropriation.
Well, Tom looks that up. That sounds about right. And currently, the OLS fund, how that works is in general, like there is a transfer from the general fund to the OLS fund to support those activities. So it really is primarily general funded. But when I would have to double check with my colleagues, but there is some provisions related to the OLS fund about certain business activity should be supporting the activities at the Office of Labor Standards.
So the revenue is $7.8 million or so in the 2024 adopted budget. And the way it's written, those funds are basically transferred as a piece from the larger B&O tax, so the business and occupation tax that goes into the general fund. So it's written as basically general fund revenue that comes in that is then transferred to the OLS fund to support OLS operations. And I think it's, as Ali was kind of indicating, it's intended to kind of earmark a slice of the B&O tax for OLS. But it's really just a transfer from general fund to the OLS fund. And that's likely why citywide accounting classifies it as a general fund.
Okay, thank you. So it's not the proceeds from settlements?
There is some small piece of that, but the bulk of it is going to be the B&O tax transfer.
Financial analysis in real time. Councilmember Moore.
Thank you. I have a quick question about the enterprise funds and why SDCI is an enterprise fund.
Great question.
The bulk of SDCI's budget and the revenues that support their work is permit fee created, and is that where all the permit fees go? Is into their enterprise fund?
Yes.
Tom, right? Yeah.
Trying to understand,
Yeah.
yeah.
So it is in general like the departments that are sort of self-contained, like the permit charges that the SDCI raises, they enterprise fund to sort of self-contain that. I think another example of an enterprise fund is the IT fund. Is that?
That's an internal service fund.
That's the internal service fund. So Tom will have other examples of enterprise funds.
I mean, the great examples of the enterprise funds are, again, the light fund, which is kind of electric utility money, and the water fund, which is funding water utility and SPU. So it's the same concept. It's those monies. So we operate it like a business where it's cost recovery to do the regulation of the local land use, and so when a permit is provided, it's covering the cost to do that regulation and nothing more. Otherwise, again, it's a tax. So these enterprise funds are accounted to create for the relationship that it's essentially run like a business, to not generate a profit, but just to do cost recovery indicated by the level of regulation that we have in our local codes.
So the permit fees that are charged are just for cost recovery of processing the permit?
Yes, the cost of regulation. Yes.
Okay. Okay, thank you.
And Councilmember Kettle, I see your hand, but I'm going to tag on to Councilmember Moore because this is going to come up later when we're looking at the permit audit. When we were doing this work a number of years ago, we identified the fact that the Seattle Fire Department doesn't have access to the permit enterprise funds. And so the permit reviewer in the fire department, in the fire marshal's office, has multiple duties where they were responding to the fire in Roosevelt just the other day, but then they also have to attend to permit review and certificate of occupancy inspections. And so I know we've been trying to allow the fire department access to the enterprise funds so that we can permit more rapidly. And that's not the fault of the fire department, but it's a structural issue that we've identified. Councilmember Kettle, public safety.
Well, it's always public safety. Thank you for that, Chair. But you kind of answered it. But OLS has a similar kind of function, but the OLS has kind of got a two-step process where SDCI is, you're saying it's enterprise, but they also have this oversight role. And it's interesting that you have two approaches that similarly seem to be, some overlap. And I was just curious of the two approaches. And you kind of answered it after I put my hand up, but if you can just step back through that really quick, I appreciate it.
Thank you for the question. So I believe it's a concept of policy. So it's a matter of whether or not we're doing full cost recovery or not. So at this point, OLS is not set up with a kind of a fee basis where we charge the full cost of recovery. There are settlements that may be charged, but that's not the same thing as saying by doing, we're going to assess a fee across all of city businesses for the cost of OLS because, again, that's a policy decision. Whereas with SDCI, we have the policy decision has been made, or with these building permit fees, that we are going to do full cost recovery and in order to fund the regulatory operations. So right now, OLS is just essentially funded with, again, largely a general fund transfer, but perhaps different decisions could be made about that structure. I don't know what those would be, but that's the reason why it's treated differently, at least in the general ledger fund structure.
Okay, thank you.
And I'll just note that code enforcement activities are different than permit activities. So like in the SDCI example, the bulk of SDCI's budget is related to their permit fees and revenues and paying for the cost of issuing and reviewing permits and doing inspections, paying for our building inspectors and that sort of thing. But the code enforcement arm of SDCI is primarily general fund funded. So in Chair Strauss's example of the tree penalty fund, that is a general fund revenue, and I believe part of the goal of creating an accounting system so we could track that is just to get a sense of, are our penalties covering the cost of enforcing some of those activities and understanding where those dollars are going. That's one piece of information you could pull from having better accounting for those revenues. But in general, we're not charging, if you are getting a permit to build something on your property, those fees are not covering the cost of enforcing future complaints against you if you did something weird with that property. Sorry, lost the thread there, but I think you get my point.
And I'll tag onto that, and just to add more context, the desire was really that the penalties from illegally cutting trees would be used to plant more trees. And then tagging on to Councilmember Kettle, when OLS was set up, this was even before my time, but as I read this policy, it's set up so that any settlements that OLS gets, they are restricted in how much they receive, and they are funded by B&O tax so that it is a consistent way of funding it, so that OLS is not incentivized to go after settlements to fund their own program.
That's exactly what I was thinking. We want to make sure that we're not just applying the law in order to generate more resources. So you said that the settlements, there's a restriction on how much OLS can get from the settlements. Is that what you're saying?
And I am over my skis, Council President, and then I'm over my skis. So I might say we dig into this deeper after committee, but that's just
Great.
from my recollection sitting here with no research before me.
Yeah, I think we have other folks on central staff who are better equipped to answer that in more detail. But in general, when you see settlements announced from the Office of Labor Standards, the bulk of that money is going to remedy the impact to workers or the business or that sort of thing versus paying the city for the cost. And so it isn't cost recovery. And for some of the reasons that you suggested, Council President Nelson, of it could be perceived as enforcement just to generate money versus the goal of having all of our employees and businesses working in line with law, with local and state law. Yeah.
No further questions on this slide. Back to you, Tom.
So this graph, the intent of this graph is to demonstrate how the categories of revenues align with the restricted and non-restricted funds. So at a very high level, the bars on the left are the general funds and the special revenue funds. And as you can see, the largest categories on each of these are the orange category, which is taxes. And then the internal service funds, so FAS fund and IT fund, and the enterprise funds, the City Light and SBU and SDCI, almost all of their revenue is from the charges, so charges for goods and services. So it's kind of a hint of when you are dealing with a fund that receives a lot of charge revenue, it's likely restricted. When you're dealing with an enterprise fund or an internal service fund, those revenues are restricted. And so that kind of explains why, even though there's a $7.8 billion budget, it's not, there's not this concept of fungibility where the dollars, most of the dollars have a prescribed purpose and they have to operate within their lane of restriction. And we can't, for example, just use monies from the utilities to help solve our general fund deficit. And so if we could go to the next, we're going to just focus now on the places where there are some alternatives. And this is within the areas of the general funds and the special revenue funds. So as I mentioned earlier, the general funds, we talk about the general fund. So there is the main general fund, but there are also these other funds that are kind of considered general funds: the Judgment and Claims Fund, the Sugar Sweetened Beverage Tax Fund, and the Cumulative Reserve Fund and the OLS Fund are all general funds. So they're kind of viewed as unrestricted in that way. Though there are restrictions that applied. Sweetened Beverage Tax Fund has a restriction applied by Seattle Municipal Code to used for food access and youth development. Then the Judgment and Claims Fund is unrestricted. It receives transfers from the main general fund, and it receives kind of claim and settlement revenue. But those monies are used to pay claims. So if we use those revenues for some other purpose, we'd still have to pay the claims due from the Judgment Claims Fund. So that kind of restriction makes sense in a kind of technical and practical way.
Councilmember Rivera. I almost called you Councilmember
Thank
Maritza.
you, Chair. Just a quick question about the Judgment and Claims Fund. Does it cover our judgment and claims? Do you know?
Councilmember Maritza, if you, Rivera, can you closer to the microphone?
Oh, sorry.
Yeah.
I'm on the Judgment and Claims Fund. Does it usually cover the city's judgment? Is it enough to usually cover the judgments and claims, or do we wind up having to supplement?
In general, the level at which the Judgment and Claims Fund is funded year to year is formed by our actuarial information and that sort of thing. And I think we fund it at a 90% rate. However, in recent years, we have seen an increase in our judgment and claims cost, largely stemming from some of the actions in 2020. And we're continuing to see some of that play out today. So over the last several years, Council has been asked to increase increase appropriations to the Judgment and Claims Fund in the mid-year and year-end supplemental budgets. The Budget Office, the City Attorney's Office, and Risk Management in the Finance Department are working hard to try to right-size that, and it is still to be determined if those increases over the last several years are the new normal or really are an anomaly. And so we are continuing to monitor and track that. And there is some now ongoing required reporting in advance of like mid-year budget discussions from the City Attorney's Office and Risk Management about how we are tracking and if they are anticipating that additional resources will be needed.
Thank you.
Councilmember Moore.
Yeah, thank you. Has there ever been any discussion about, like take SPD, for example, when we pay out a large judgment, taking that out of their budget, different departments' budgets, and SDOT is another
Yes.
prime example?
We have had those conversations, and it is a little, it varies how this is treated, but in general, what you will see, because it coming out of their budget is just, we'd have to increase their budget and then transfer it to the Judgment and Claims Fund. But it does reflect, like, it isn't, I think one way you could do that is they could take a cut, like they would have to cut other things in order to just take it out of their budget. In general, sort of if there's a pattern, right? Like if for a couple of years a department has higher than projected judgment and claims payouts, like stemming from actions that department is responsible for, you will see in their budget their sort of internal service costs increase. So you might, and there are some examples of that in the budget review document. Like for example, the mayor's office budget between 2019 and 24 looks like it has grown significantly, and some of that is just due to judgment and claims that were tied to that department. So their 24 budget was increased to reflect how they have had higher judgment and claims costs, and then their budget pays the Judgment and Claims Fund. So I guess that's a long way of saying, yes, you can, but you would have to, and that is how it works, but the practice has been to increase that department's budget so they can pay a larger share into the Judgment and Claims Fund versus sort of making them make different decisions to reduce spending elsewhere to pay for their judgment and claims, which could be tricky depending on when a judgment falls.
But it's something that, that's a policy choice, right? And it's a way to also incentivize people to be more mindful and careful rather than, the city will pay for our negligence.
Sure, it is a policy choice.
Yeah. Thank you.
Thank you, Councilmember Moore. And Ally, just clarifying, when you were talking about the mayor's budget, you were not referring to Mayor Harrell.
I was not. It refers. Yes, it refers. Thank you. It refers to the department, and so that it was actually to point out that it looks larger, and it wasn't actions of this mayor, and it isn't really illustrating the actual cost of running the mayor's office year to year. It's like if in 1 year they had a bigger payout from previous mayor actions. But yes, that is correct. Thank you for that clarification.
Thank you.
The Ledge Department has also been,
Council President.
sorry, and so we also need to be mindful that we have also been responsible for claims against the city or in either policy or actions or whatever.
Yeah, I only use the mayor's office example because I know in the budget review document we highlight that is one of the anomalies, and it sort of misrepresents the growth in their budget. It was not in any way meant to suggest that the mayor is causing trouble out there in that way.
I'm going to keep us moving. Here we go. Here's the ladder.
Hey. Thanks. So, again, drilling down, general fund, special revenue funds. We're going to talk about special revenue funds. So a large category of that are employee benefit management funds. So it's like the healthcare fund, which is for employee and employer contributions to our self-insured health program, industrial insurance, so workers' comp. Those are special revenue funds that are managed for that specific purpose. And then funds with significant fee support, which is, some of the larger ones are the Transportation Fund and the Parks and Rec Fund. And then levy funds, so all the levy funds, the lid lifts are also special revenue funds managed for that specific purpose. And then I would just say that within that realm of the lid lift, a general purpose lid lift is allowable. So just kind of a general expense levy, if you will. Just adding that in there. But all of these lid lift funds, as you are learning through the process with the transportation levy, have a prescribed rate, prescribed purpose, and structure that's determined by the vote. And then this next slide gets to the place, I believe, where we have more optionality, and the kind of term of art that you have likely heard by now of general fund adjacent. So these are the kind of the heavy hitter special revenue funds where there are local restrictions that are applied. The largest of which currently is the Jumpstart Payroll Expense Tax Fund. We covered that at the last Select Budget Committee meeting with a presentation kind of defining and demonstrating how those restrictions are currently laid out in the budget. The Arts and Culture Fund, so that's admissions tax, which is a tax that's provided for by the state, but it's unrestricted of how we use it. We apply local restrictions of how to use it for arts purposes. The Short-Term Rental Tax Fund, it comes with some kind of higher level state restrictions applied. We actually take that a step further and apply additional local restrictions, though different choices can be made. And then some of the smaller ones, the Cable Franchise Fee Fund, which is from our, fees from our cable franchise that are used for a variety of purposes, one of which is Seattle Channel, which is allowing people to watch us today. And the School Safety and Traffic Pedestrian Fund also is a kind of a penalty and a fine, so it's not restricted, but we apply restrictions locally about how we want to use those monies. And then at the next slide, you can see kind of the magnitude of each of these. So $325 million, this is the adopted budget. As we know, the revenue forecast for that fund, the Jumpstart Fund, has gotten higher. Sweet and Beverage Tax Fund, $22.5 million, Arts and Culture, $23.5, and short-term rental tax, $11.9. So different decisions could be made about those restrictions since they are applied locally. However, all of these funds are budgeted for uses under the current restrictions in the budget. So different decisions could be made with trade-offs. This is just a way of showing that you can expand kind of the decision frontier for making decisions in the budget by kind of lumping some of these, one or more of these restricted categories into the general fund discussion. However, there of course are trade-offs because those prior uses would perhaps not be fulfilled if a different decision is made. It's just a matter of expanding options. So we could, then that's, I think, takes us to the kind of key takeaways, which is that there are state and external restrictions applied of how we can collect revenues and how we can use them. And as we've seen, most of the budget is in fact restricted in some way. We manage those restrictions with a financial structure that uses funds and accounts to kind of define the parameters of how those restrictions are applied in the budget. Tax revenues in general are the least restricted source, but though there are restrictions applied in some cases, the self-imposed restrictions, those ones where a local ordinance is controlling the use, are the places where different decisions can be made. And those are prevalent in the special revenue funds. And then it's possible to remove or modify many of those restrictions with an ordinance change. And kind of, I didn't put that here, but that's one of those things that may come in the mayor's budget proposal with a decision to alter the parameters that restrict one or more of these categories that we have talked about.
And if it's an ordinance change, and Council President, I see your hand, if it's an ordinance change, then council would have to adopt that ordinance. Is that correct?
Yes, Chair Strout, that's correct. And then with the budget, so we'll get the larger budget ordinance, but there are also these other kind of reconciling bills that are part of the mayor's larger budget proposal. And in that case, if there was a decision about one of these restricted sources, there would be an ordinance as part of that budget submission that would make that change. And so it's kind of, in a way, it's baked in to the proposal, and then it's at council's option as to how to engage with that and whether to accept or make different decisions.
And you've all probably, well, I know I've said this before, whether it's in this room or privately in your offices, but that is one of the challenges you all have in receiving a balanced budget that does not have to be based on current law. It can be based on assumptions about changes to law. So if the mayor's proposal is balanced, assuming that the council will agree to changing policies on use of certain funds, you absolutely have authority to reject that proposal or modify it, but you also have to unravel the proposed ways the mayor had used those funds in the budget. So it is just part of the fun that we do each fall in the budget process.
Thank you for that additional context, and I'll pass it to Council President in just a second. Just to say, a preview for our budget session this fall is there are many different bills that make up the budget. And so when we vote on the day of voting in the budget, we have a special meeting simply because it takes a half an hour to an hour just to vote on all of the different bills. Yeah. Council President.
Do we still have a transportation network company fund? Is that a restricted fund?
Council President, we do not have a fund. It's actually similar to the tree ordinance. It's an account. So it's a revenue account in the general fund that is managed in a specific way. So it has restrictions, but it's within this kind of larger unrestricted pool.
Thanks.
I'm not seeing any other questions because we've taken them. Councilmember Rivera.
Thank you, Chair. On some of these restricted funds, what happened? Departments have underspend every year. For general fund, they can go back to general fund. If it's a levy, for instance, transportation levy, where do the funds go? Do they get carry forward? I mean, there's carry forward authority if they actually need it for that purpose. Sometimes they don't. Departments wind up deciding to repurpose it for something else. We don't always know that at this level. But if it's a levy and let's say there's underspend, there is no need for it, how does that get captured moving forward since it's a restricted?
Yeah, sure, Councilmember Rivera. Thank you for that question. So that in that case, when it's not an appropriation that they want to carry forward, it's just money that they don't need, it just reverts to the balance. So it just kind of goes into the balance of the fund, and it's available to be used in any way in line with the kind of restrictions for that fund. So that's how it does it. It goes to the kind of cash balance and then is available for reappropriation.
And it is there are different ways, like capital appropriations automatically carry forward from year to year. Operating appropriations don't, but if they're encumbered. So there is an exercise that the city budget goes through with all departments after the year is closing. And so there are a couple of ways funds could be carried forward. One, so yes, they lapse to that fund's balance. So if you didn't spend some general fund, it would become part of the fund balance, and council could make future decisions about appropriating those funds for other uses. The first time you are typically asked to make those decisions is through the annual carry forward ordinances, and that reflects areas of underspend that would otherwise lapse that the department has requested that they carry those forward. And usually it's to if the system is working right, it's to carry them forward for the same purpose they were originally proposed in the previous year's budget. The budget office, the executive first makes decisions about which of those requests they're going to accommodate, and then as you all just walked through in the last few weeks, you all deliberate and decide whether or not you agree with those carry forward requests. And if you had rejected any of those, for example, it would have lapsed to whichever fund it had started from, and future decisions could be used about allocating those funds consistent with whichever restrictions apply.
And Councilmember Rivera, that's a really good question, because there are a number of departments that are routinely funded at a higher level in which we know that they can spend in a given year. And that's where the use of a proviso is really useful, colleagues, because if we know, especially within a budget line item, that we have funded beyond what we believe that they can spend, putting a proviso allows them to keep that money in their budget and allows us to say, you can't just use it for anything.
But
Keep going. Councilmember Rivera.
and just, I mean, like we saw in the last couple weeks, a proviso doesn't, departments, when the money lapses, they can always ask for carry forward authority in the following year, whether or not the money's provisoed.
Mm-hmm. Yep.
That's right. And in the annual budget process, because we do look at the year-end supplemental budget at that time, and we're trying to the budget office and then central staff will be looking at is there any underspend projected, and could council make decisions now about how to use those funds next year? So for example, if we knew a significant chunk of a department's budget was likely not to get spent in this year, you could even decide in advance of the annual carry forward bill to amend this year's budget to add in an automatic carry forward, or cut it from this year's budget and add it back to next year. So there's a number of tools available, and as we get closer to the end of the year, we better understand what the spend rate might be, and so sometimes can make earlier decisions.
Wonderful. I think those are all of the questions on this presentation. Noting we took a little bit longer on that presentation, and I think it was well worth it. We have 2 additional presentations. Clerk, will you please read the short title of the next agenda item into the record?
Agenda item 2, Revenue Stabilization Work Group Briefing for briefing and discussion.
And so I will just say this is an overview of a group that was put together between the mayor's office and the previous finance chair to look at other options for revenue stabilization within this projected revenue gap. I will say that because we had members of the public engaged in this activity, they were not necessarily able to receive the advice of our law department, which, when we were talking about the uniformity clause previously, has great impact. And so, for instance, there were ideas that I wanted to put forward early in my tenure here that I tried. I was told that it was not possible, and then showed up on this list, and so I thought we had new advice. In fact, we did not. But with that, I'll turn it over to you, Deputy Director, and Tom, to walk us through what happened over the last few years.
Great. Thank you, Chair Strauss. So I'm just going to provide a pretty high-level overview, but I'm happy to talk with you all offline, and the report is available in Legistar as well. But I will summarize some of this work. So where did this all come from, this revenue stabilization work group? In the fall of 2021, as the previous council was contemplating the budget for 2022, it was known, central staff was doing their regular rounds of demonstrating how sustainable or not the proposed or final budget would be. And so there was acknowledgement that there were a number of ongoing expenditures where we didn't have an ongoing way to pay for them in future years. And so that council's decision at that point was to sort of commit to considering new revenue options to continue some of the expenditures and address the revenue situation to provide ongoing support for some of our base general fund services. So they adopted a statement of legislative intent, which is essentially a tool the council uses to provide policy guidance, state a legislative intent, ask for certain work or report from the executive. And in this case, it expressed council's commitment to working with the mayor to review Seattle's tax structure and identify ways to make it more equitable and to raise new progressive revenues. Embedded in that statement of legislative intent, or what we often refer to as a SLI, if I slip into the use of the acronym, was to convene a work group to identify progressive revenue options that included a variety of stakeholders from the business community, from labor, from nonprofit organizations, and that type of thing. And so before I walk through that process, I'll just note that I am generally highlighting the information that came out of that work group's final report. This was not a central staff work product. And if this council decided to pursue any of those ideas, we would provide additional analysis on that. So the work group was convened in the fall of 2022 and met 9 times between October of 22 and August of 23. That initial report, or sort of after initial discussions that provided sort of background and context for that work group, some of which is similar to some of the background and context we've done here about how we got here in terms of the general fund deficit, that led to discussions about potential revenues ideas. And it's important to note in this context that these were discussions. This was a group of people that did not necessarily all believe that a revenue solution was, or that new revenue was a solution, and some that felt strongly that new revenue was critical. And so what came out of that work group was reviewing a list of 63 potential revenue ideas, and they narrowed that down to a list of 9 options. But I want to be really clear, these were not recommendations. These were, of that list, these are the 9 that this group, if the city is going to consider new revenues, think should be considered further, but it wasn't a, yes, this group all agrees that we should impose, that the city should adopt these 9 taxes or not. So it included 13 members and 2 co-chairs, a council member and a representative of the mayor's office. And the list of 9 here are the ones that they asked, they suggested could be looked into further. And again, as Chair Strauss noted, they were not privy to the city's attorney-client relationship, and therefore detailed legal analysis could not inform their review. So that is part of, like, here's some things you should look into more, and if you want to pursue any of these, we will work with the city attorney's office to provide you all with the legal advice on whether or not it's possible or how that would work.
Thank you. Before moving on, Councilmember Kettle.
Thank you, Chair Strauss. Thank you, Ms. Vanucci, about the point regarding that there was no consensus coming out of this. And because I say it, as mentioned yesterday, from a good governance perspective, was there a companion expenses stabilization work group effort also initiated?
There was not.
Okay.
And Councilmember Kettle, that's $1 for the good governance jar.
Thank you. I mean, it's just a general good governance point of view. I mean, we should be looking at expenses just as much as we look at revenue, and the fact that there was not a companion work group points to a certain, lack of good governance in my view.
Thank you.
That's $3.
$3.
Mr. Chair, if I may,
Councilor Zaka.
point of personal privilege, actually, I do appreciate good governance. Thank you.
Thank you. It's $4. We're going to solve this budget hole by the end of this meeting. Deputy Director.
Okay, so moving on, that report identifying those nine options was released in August of 23. We did a briefing that was similar to this, but maybe a little bit more detailed, on August 10th of last year. At that meeting, we noted that central staff had identified, of those 9 lists, there were a few that were most, from just sort of a practical administrative standpoint, were likely the best position to be considered on a shorter time frame. Or to jumpstart tax, modifying the jumpstart tax and a city level capital gains tax, and that the high CEO pay ratio tax might be the other option technically that would be most ready to pursue. At that time, former Finance and Housing Chair Mosqueda requested that we prepare options for those three revenue ideas for consideration and discussion during that fall's budget process. And so following those discussions in
Deputy
August.
Director, before moving on there, I was just going state that since this report was received or delivered, that the council did change the Jumpstart payroll expense tax. I think you were just getting there. However, that was separated from Councilmember Mosqueda's proposals. These were a separate council member bringing forward their own set of 3 proposals.
Yeah, I mean, yes, and we had done some initial work to sort of look into options that, and, you know, our work, if you ask us, is available to all, you know, we serve all 9 equally, and so if you ask us, we will provide the same information. In the end, the council did not choose to modify the Jumpstart tax in the fall to, as a general revenue, progressive revenue solution to address the general fund gap, but there was a decision to increase the Jumpstart tax, payroll expense tax rates to generate $20 million, but it was designated for a specific purpose, which was investments in student mental health services. And I'll just note here that before that, and so that money was added to the Department of Education and Early Learning's budget. Before they can fully implement that spending, there does need to be some legislative action in order to fully allow that, because currently the Jumpstart Fund policies don't include a category for student mental health investments.
Thank you, Deputy Director. And it was my understanding that we did not, we as we as the city or even council had consulted the school district before this vote. And it's my understanding that we did not do outreach before taking these votes last year.
I can't speak to any work that the sponsor's office may or may not have done with the school district. I know there were some conversations between central staff and the department, but I am not aware of conversations directly with how this would be implemented.
Councilmember Rivera.
And Chair, to that point, I'm not sure that I'm aware of any conversations between the department and the city in general with public health regarding this particular investment.
Yeah, and it's that we all want more mental health counselors in schools. Like that's not I haven't found somebody who disagrees with that point of view, but the consultation with another governmental entity to understand whether they can actually spend the money that we raise or not, and that to ensure that there's a capacity that those dollars can be spent in the ways that we're talking about. I see Councilmember Rivera and then Council President.
Yeah, and thank you, Chair, because it is not a line of business that the department has formally engaged in. It is a newer line of business. Prior to these dollars, the council had given the department, I think, for $0.5 million, also for mental health. We don't know how that money has been implemented on the department to determine. Have no idea how the money was implemented, how well it's working. Again, it is a new line of business. There are no mental health experts at the department or at the city. There's public health, but I'm not sure how plugged in public health was to that. So definitely a lot of questions here. Yeah, thank you.
Council President.
Well, so do we have $10 million that is sitting in some account that is not allocated? Because if it was designed to generate $20 million a year, presumably halfway through the year, there would be about $10 million that's sitting around.
I can't tell you on what the collection rate is, because the payroll tax is done. There are quarterly estimates, and then it gets trued up at the end of the year. So possibly, but I will say that the Department of Education and Early Learning has $20 million of appropriation authority to be used for this purpose, but they can't actually execute that spending until unless you modify the policies in some way, and that could be done through a legislative action to formally amend the policies, or there is a way to do that via proviso in a supplemental budget if the council so desired, and that could be done for the full 20 million or a portion thereof. And then I'll just say quickly on the use of the funds that the $20 million, I think I just am getting some real-time information from my colleague, had implemented some pilot projects in 5 schools, and so I believe the $20 million may have been informed by some of those costs, and if we have any additional details, we'll follow up with you online.
Thank you. Yeah.
Sorry,
Councilmember
Chair,
Rivera.
on this one, I've talked to the department, and they don't yet have a plan for these funds. So we'll be working with the department, and it's something that as we come forward in the committee that I chair, we will be getting more information.
Yeah, and I was not meaning to contradict. It was what informed, there was some, that was what informed the 20 million amount. What that they don't yet have a plan to actually implement is a different current issue with the use, but that may have been what informed the proposal in some way.
And Councilmember Kettle, is that an old hand or a new hand?
No, that's a new hand. Thank
There
you.
we go.
Chair, thank you. For the record, I definitely support mental health services in our schools, but public education is a state function. Mental health is a state function. And this should have been preceded by years of engagement. I've already spoken to OIR. This should be at the top of the list for next year's engagement with the state for it to do its duty, and we should not be letting them off the hook. And so we should be definitely pushing this in terms of our advocacy with the state. Because for one thing, I think it sets a bad precedent that we're letting, this is the issues that we see in public safety all the time. Public health, another function that has a state and county piece to it. We have to be doing our due diligence as part of the good governance efforts. And this is a bit of frustration because again, it's showing up now in terms of the budget process to bring it to this committee. And it's unfortunate that cart before the horse is probably the best way to say it. And again, definitely support mental health spending in our schools, but we definitely should be, from a budget perspective, clamoring with the state to fulfill its duties.
Couldn't agree more. I think we all want our students to have the best resources possible in education and mental health, and it is a state duty. Councilmember Rivera.
Yes, absolutely. I could not, as a mom myself, I could not agree more that we care about mental health for youth in general across the city. And so I understand where this was coming from, but to Council Member Kettle's point, we need to make sure that we are holding the state accountable for what their responsibility is, and also being careful to engage. I mean, this is a serious topic, and it requires expertise. And if we do not have that expertise, I worry about how this will be implemented. So just, that's also of concern to me.
Well said. Any other questions on this portion? I think there were two other ideas coming out of this work group that Deputy Director has to present to us.
So another option that was looked into and developed was a city-level capital gains tax. There was a council bill introduced to propose a local capital gains. It was using the same structure and referenced the state capital gains tax, but it added, it would be a 2% local rate on gains from the sale of non-exempt capital assets. At that time, we did work with the Independent Office of Revenue, Economic and Revenue Forecasts to estimate what that could generate. I'll just note this is, I have a slight error on the slide. It was about $19 million per 1%, so the 2% proposal would actually generate 38, was estimated to generate 38 million. At that time, both the forecast office and central staff highlighted that there is an unusually high degree of volatility and uncertainty in these estimates, and we've seen that come through in recent state collections. This year's collections versus last year's have fluctuated significantly, and so it is just a revenue that is available to the city to collect, but we would advise some caution in fully allocating those uses for ongoing expenses year over year because they will fluctuate. So it would be a good for sort of one-time expenditures or some base amount as ongoing, and anything above that to be available for one-time spending should the city wish to, should this council wish to pursue it. It was not acted on during last year's budget, but it was discussed.
And Councilmember Moore.
Well, I just want to note, though, that it continues to be a similar argument for the payroll expense tax, right? That it's a volatile tax, and yet we implemented it, and it's been wildly successful. So just want to make that point for the record.
Yeah, and I guess it's more just, it is good to have some years of observation of how a tax performs before fully programming all of the projected revenues, because as I showed in the last presentation, from the time of budget adoption to the actual collections has varied wildly for the payroll expense tax, and so has caused some in-year decisions. And then I'll also just note there is a ballot initiative at the state level to repeal the state capital gains tax that we don't think would preempt the city from moving forward, but more work would need, if that happened, we would need to do more work to understand and reconcile, like there would need to be changes to this bill if that repeal was successful. And so more work would be needed based on the outcome of that statewide vote.
Correct me if I'm wrong, but I think that also includes removing the local jurisdiction's ability to impose such tax.
We will need to confirm that. We didn't.
Apologies,
The
mic was off.
capital
So I looked at that yesterday, and it seems like it's just a clean repeal of the state tax without a local implication. Perhaps you're thinking of there was a local or a income tax preemption that was actually adopted by the legislature, and that does say no income tax for the state, no income tax for local governments either.
Got it. Okay, thank you.
Good questions. Please.
And then finally, there was a high CEO pay ratio tax considered, which is essentially looking at companies where the highest paid employee, CEO, or sometimes just in some jurisdictions, it's just been the upper tiers of the corporate management. If their pay is significantly greater, like 100 times greater than the average worker, there would be an additional tax applied. Portland and San Francisco are two examples who have this type of tax in place. We did some work to look at that and identified a potential path that would be a surtax on the Jumpstart payroll expense tax. And likely doing something that would be more similar to San Francisco's model, which generates additional revenue, may require some changes to state law, but more work would need to be done. What we found on the initial work where it was a surtax to the Jumpstart payroll expense tax, it wouldn't generate significant amounts of revenue. So at that time, the council didn't ask us to continue that work in the midst of budget, but more work could be done in this area to determine if there was a viable path should the council be interested.
Thank you. I'm not seeing any questions, even though that's the next slide. And Council President.
So the mayor in his State of the City, or maybe it was I think it was that speech, did say that he was not considering additional revenue sources for this budget season. So has that changed, or are you, or why are we talking about these extra sources? I mean, is there...
Good question.
Yeah.
Council President, we are going through a deep examination and review of our budgeting processes and what has happened over the last 5 and when we started this process 10 years. So this information is for all council members to make sure that we are all on the same page about what has occurred over the last 10 and last 5 years, leading us to this fall's budget practice.
Got it, because that would change the conversation going forward. So that would be...
And I know as 9 separately elected officials, we all have the prerogative to make a lot of different decisions based upon our own abilities and discretion. And the mayor also separately elected, a 10th person in this mix. We all have the prerogative to make a lot of choices at our discretion.
Thank you. And then the excessive payroll or what... CEO, whatever, that is also the source of revenue for a ballot initiative that's live right now. So does that matter?
That is a modification. It is adding an increment on the existing payroll expense tax. It's not exactly a high CEO pay ratio, but I would have to review that more carefully. But it would be another adjustment to the payroll, essentially to the payroll expense tax, sort of how it's applied and who is liable. So in the simplest form, like if you think of REIT 1 and 2, REIT 1 is the first 0.25% of tax generated on real estate transactions and can only be used for certain things. And then REIT 2 adds another quarter increment on top of that. The the proposal for the initiative, I believe, is sort of adding another rate increment and adding some new categories. So the tax would apply to some additional businesses compared to the existing payroll expense tax.
Got it. Well, I'll just, if you don't mind, piggyback on what Councilmember Kettle was saying about was there a report on expenses? I have said that it is important that we focus on our expenses as well as continually looking for new sources of revenue, because this revenue stabilization work group that SLI was passed by council months after, or the first year of the Jumpstart. And checks hadn't even started rolling in from businesses to pay for their portion of the Jumpstart tax when council decided, okay, we need a new tax. And so that tendency has played a role in getting us into this operating deficit right now. And so I just wanted to note that we have to also look at both sides of the ledger.
Council President, I just want to clarify, did you just say that the Jumpstart has contributed to the operating expense?
No.
Oh, okay. Thank you.
It's a kind of a thinking, which is that, instead of looking at our expenses, look at a different, another source of revenue. That's what I was suggesting.
Thank you. Councilmember Morales.
Thank you. I appreciate this conversation. And sort of to the council president's point, I wonder if you could talk a little bit about, this is what we do in the budget process, is go through department by department, at least the bigger ones, to see where spending is happening. And so I guess I'm curious if you anticipate having that conversation, given your request to each of us to do a deep dive into our own departments that we oversee, if you anticipate having sort of a preview before budget starts of where each of us thinks our spending needs to be reduced in our own departments.
I am continuing to meet with every council member about all of the options on the table, which is, are you finding places that you want to cut within your departments? Are you looking at new revenue? What is the council's appetite for moving forward? So and this is actually a really great segue into the last agenda item on our agenda today. Clerk, will you please read the short title of the last agenda item, and then I'll finish my statement.
Thank you.
Agenda item 3, summary of 2024 budget review for briefing and discussion.
And so, Councilmember Morales, great question. This next presentation, and then I see Councilmember Saka has a hand up, which is reviewing this segment of the Select Budget Series. Between now and August, the request is to do a deep dive into our departments and to continue meeting. I don't think that we're going to elect to use the July 12th time that we've held for this committee, but I'll confer with the Vice Chair after the meeting. So this presentation that we're about to go through is summarizing the work over the last several meetings. We'll be working internally over the next few months and continue to advocate and work with the mayor, work with the mayor's office. Councilmember Saka.
Thank you, Mr. Chair. Just to close out the conversation on the revenue stabilization work group, from my perspective, thank you this is a great agenda item. I learned a lot more about the kind of history, background, and formation of that important work group. And, I don't envy the job of my predecessors on the council at the time in creating it, but it is an absolute valid policy decision to create that. We can disagree, have valid disagreements about the scope of that, whether or not it should cover the expenses as well, and rather than revenue. But for me, and I want to thank every last individual member who served from our community, who served on a volunteer basis for that. That kind of work is critically important, and we need to encourage more people to serve on a volunteer basis and help advise and empower us as elected officials to make the best decisions possible that are fully informed. So great. I'm proud of the work of each individual task force member. And I also think there were some clear learnings that we can all appreciate from that, and nothing is perfect. And you know, I'm all about learning and improving and getting better every time. We're having, I note that just took place recently in the context of some parallel conversations we're talking about potentially right now, colleagues, as you know, standing up a task force to look at revenue funding options and create a specific plan to better meet and serve the needs rather than relying solely on billion-dollar-plus levies and other mechanisms. And so, but we need these ad hoc type of volunteer-powered community groups and task force, if you will. Unlike that one, the conversation that we're kind of having on the transportation front in that context, the output, the results of that work are likely going to survive and produce something for most of this council to consider as opposed to, and potentially take action on, as opposed to 2/3 net new composition. So learnings, grateful for the work, but as we consider, and it's not just for transportation, it's any other, we need these type of expert-led coalitions to help empower us and advise us. But it is really important to line up on scope, whatever that is, revenue, expenses, and that in the budget context, whatever the scope is, really important to line up on that. The anticipated and expected deliverables. Is it recommendations? Is it options? Is it a plan? Is it a time frame? And we'll also want to make sure it's well resourced. It's backed by resources to make sure that whatever sort of deliverable or work product is produced is to the fullest extent actually implementable, if that is the policy choice that is made, with the understanding you're always going to have like the final, like, well, you got to do some more final work to close the last mile details, and there's a balance between that and vacancy tax in this. Yeah, this is a thing. So in any event, thank you again for bringing this as a critical agenda item for all of us to learn on, and as we consider related things going forward. So thank you.
Thank you, Councilmember Saka. With 19 minutes left in this committee meeting, and I know Councilmember Morales needs to be excused in 4 minutes at 11:15. This is the next summary of the work that we've done just to prep us moving into our next phase of work, and then August. So I'll turn it over to you. I might say,
Be quick.
yes, please.
Yes, got it. As I'm teeing that up, I will just offer, for context, it wasn't a lack of conversation about the expenditure side of the equation with the former council. It was an intentional decision that continuing the way the city was spending money was important, and that the decision for the majority at that time was to pursue progressive revenue. This council is having different conversations. We've generated the budget review document to inform that review and that sort of thing. But I do think that context is important to just have on the table, and that the conversation shift over time as the context changes, as the players change, and all of that. But a future council may make different decisions than you all, and that's part of democracy.
That was no reflection on your work.
Council President?
Right. Thank you.
Yeah, thank you.
Okay, so I won't spend a whole lot of time. You all have been here right alongside us as we've walked you through a number of budget discussions to really provide information for you all and the public as you contemplate the future city budget and get ready for this fall's budget process. So we have done some conversations about the projected general fund deficit, how we got here. We released and have discussed the budget review document. We have walked through and updated the general fund financial plan and done briefings on the use of Jumpstart, and then just today on revenue restrictions. And so I'll just pull out a couple of key takeaways from some of those presentations, but It has been a pleasure to have these conversations with all of you, and I see how it is informing all our conversations throughout city policy and thinking about that balance of providing services to the community and being good stewards of public resources. So look forward to further conversation. But focusing on the general fund deficit, we've walked through a number of things, really tracing some of the background and history over the last many years of how the general fund has fluctuated in periods of low inflation and high annual revenue growth, and then as we switch to environments of high inflation and low annual revenue growth, and how that's changed and put pressure on the city's budget. And that what we found in some of that analysis that was the bulk of the expenditure growth is largely tied to baseline and technical adjustments. So just the cost of providing goods and services has increased over the years, and that revenues are not keeping pace, thus the conversations about potential areas to reduce spending or to increase revenues. We discussed a mix of tools that you all will continue to discuss and consider and decide how you would like to deploy them during the budget process after you see how the mayor has proposed to balance. In mid-May, we did an update after the year had closed out and the April forecast was released to show that projected ongoing, the gap in the general fund had grown to about $258 million since the '24 budget had been adopted, and that much of what was driving that was the settled labor contract costs that had exceeded the assumptions in the '24 adopted budget.
Thank you. And just noting for the record, Councilmember Morales and Councilmember Hollingsworth are excused.
I know you all have this by your bed, next to your beds at night. We released the budget review document, which is a riveting 220 plus pages of budget information, where we provide a summary of citywide budget changes over a 5-year period and then walk through each department's budget to provide, again, that information in advance for you all to be thinking about your priorities in the city budget and how you might want to address the deficit. And again, here we found similar things. Primarily, expenditure growth is driven by inflation. The budget has grown about 29% over the 5-year period we looked at. That's about 5.8% per year. That was during a period where inflation was averaging about 5%. And then we identified sort of which departments are really driving that growth, both at the citywide, the entire budget level, as well, drilling in on the Jumpstart Fund and the general fund, and that information is all detailed in our budget review documents. Last committee meeting, we also did a walkthrough of some background and information about the development of the Jumpstart payroll expense tax, the fund policies, and how those policies have been modified over the years to address some of the questions that you all are continuing to discuss today. And that the tax revenue has really performed better than initial estimates, I think, as Councilmember Moore pointed out already today. But that does still continue to be somewhat fluctuating, but overall is forming our initial estimates in 2020. And then, as has been in past years, there are policy options for the council to consider with the Jumpstart Fund. And really, we outlined a number of more detailed questions, but really the question for all of you to be thinking about is, should the Jumpstart tax revenues continue to be used to help address the projected general fund deficit? And if yes, how so? And that will be an ongoing conversation that I expect to be taken up in earnest during the fall budget process. And then I won't spend much time, or really not at all, on this one since we just walked through it, but the takeaway is much of our city revenue, like how we collect it, is restricted, how you use it, how you can use it is restricted. Thus, that makes the general fund problem all the more difficult. But I think with these budget briefings and internal discussions and work, we have set you all up with information to help make those informed discussions and decisions this fall. I will just note, I really invite you all to to continue to look at the budget review document and other materials we've provided and engage with central staff outside of committee. We have tried to walk through sort of how to use that document and why we created it in committee. But the next, sort of the ball is now in your court to think about, what does this information mean, right? Like, how does this, where are there like things in that you are seeing that these are critical services that we must protect and improve? Where are areas where we need to know more about outcomes and accountability? And where are areas that might, matter to people, but may not be as high of a priority in the context of facing diminishing resources. And so I really invite you to reach out to the central staff analysts assigned to departments that are in your committee or departments that are a priority for you to help you get prepared for making hard decisions this fall. But coming up next, you'll be making some mid-year supplemental budget decisions in July and August, and we really want to set those conversations up to think about both the short and longer term impacts of those mid-year decisions and how that plays into balancing. There'll also be another revenue forecast update in August, and then in August, Chair Strauss has planned to have a presentation where we will walk through how the fall budget process and discussions will go in committee, and we will also be preparing some in-office briefings in advance of that with all of you.
Thank you. And I see Councilmember Moore's hand. I'm just going to briefly state, for the mid-year supplemental budget legislation, we will brief this in Finance, Native Communities, and Tribal Governments Committee and then vote on it in the next Select Budget Committee in August. So just understanding that. But over to you, Councilmember Moore.
Thank you very much, Chair. That was helpful. Yeah, just before I ask my questions, did want to say this is a very helpful presentation. And in fact, all the presentations you've presented have been incredibly helpful. So thank you so much for the care that you're taking with these and the clarity. Quick question. So I'm assuming that when we're talking about looking at pulling from Jumpstart, potentially putting that into the general fund, that you would present us with a detailed analysis of what the trade-offs are to the programs that would be affected, like housing, EDI, economic development, Green New Deal.
Yes, if asked the question, right? At some point, there is so much information in the budget, and so what we've provided in the budget review document is how those funds are currently being allocated and what they're being spent on. If you want to have a specific set of information of what would happen if we, did X, we can certainly provide that, but we're looking to you to sort of tease out where to focus our attention, because there's a lot of different areas we could pursue. There are a lot of different ways that could go. So I'm happy to talk with you, if there are a couple of scenarios you would like to sort of play out to understand what the implications of if we pulled the lever in this direction or that direction. Happy to do that.
Yeah, thank you. That would be very helpful. And then the other question, you raised the point about when the mayor transmits the executive's legislation, if we don't necessarily agree with how that's been done, how helpful can you be with us in pulling out those threads?
That is much of what central staff is doing. So when we receive the budget, we will look at it and we will do a review and presentations on you will see our team focusing a lot on, is it sustainable, right? Is this a short or long-term decision? And we will look at how does the proposal compare to current law and what are the trade-offs of that? And so absolutely, Tom has what I would say is now a tradition of the annual general fund balancing analysis that is typically followed by an analysis of how the Jumpstart Fund is proposed to be used, any proposed changes to the policy. So we are absolutely doing that work for the council, and then we'll look at other issues specific to just department changes and identify policy options where appropriate, or sometimes just highlight this is a change we've not necessarily identified a specific different choice to make at that moment in time, but want to make sure council is aware. And then if if you don't agree, we would try to continue to do work to identify what the alternatives are or what the consequence would be of rejecting that proposal.
Great, thank you so much.
And I see other hands. I'll call on you in just a second just to say, Councilmember Moore, that was a very good question, because what you just spoke about is the work that we all need to be doing over the next 2 months to use the budget review document to ask specific questions of central staff so that we have the information ready before fall. With that, Councilmember Rivera.
Thank you, Chair. I too want to lend my gratitude to Central staff and to you, Ally and Tom, for the great presentations today. I think it was a great way to enter the budget process, so I appreciate Chair bringing this before to us this morning. And I also want to underscore and appreciate, Ally, you saying, and Tom, this is going to be hard work. It is hard work. And I think it's hard work because I see value in everything that the city does, and then the reality of we can't do it all. And I hate to be that person that has, with you all colleagues, determine what right sizing we need to do. But I just want to call it out up front that it is hard work. I see value in all the work, and yet the reality is we can't do all the work because we don't have all the funding to do so. And that is what makes it hard work. But the value is there. Thank you.
Thank you. Council President.
Well, I just wanted to say thank you also. I mean, this is the gift that keeps on giving.
Please, microphone.
I mean, just
Council
today,
President.
I referred to it. Councilmember Moore, your point was really well taken when you just said, will we be getting information about how the Jumpstart funds are being used for housing, et cetera? Because a couple meetings ago, I think it was in your committee meeting, you did ask the presenters, I think, for information about the sources of funding for housing. And have you gotten that information yet? Because I'd be interested if you have.
I have gotten
Okay.
that information, yes. But I am also interested in the other pieces that are funded
Oh, yeah,
through.
I understand that you're interested in the whole fund.
Yeah.
Maybe we can talk offline about the information that you've received, because I am interested
sure,
in that too.
absolutely, yes.
Thanks.
With that, I just have to say success is not by accident. And just the level of information, the level of work that both Ally and Tom have done for this committee meeting is above and beyond what is typically asked of them. This is just one of many meetings that we've asked them to prepare in addition to the budget review document. So just gratitude to you for engaging in the fall budget season in springtime. And I think what you all recognize, what we all got to see firsthand with Tom today, is the number of years that he's worked here and the level of expertise that he has. He's able to do financial analysis in real time before you in committee. And so that's not a skill or a set of knowledge that everyone or many people have. And so I want to highlight that it seemed very normal and natural for you to do that, but there are very few people that can actually do that. With that, the last thing that I will share is the call to meet with central staff to ask the questions that you need information for before we get to fall. Take those meetings now. I will be meeting with each of you. If I've already met with you, I will meet with you again. And any further questions?
I look forward to the meeting.
Thank you very much. With that, this does conclude the Wednesday, June 5th, 2024 meeting of the Select Budget Committee on time, early by 3 minutes. The next Select Budget Committee meeting is scheduled for Wednesday, August 7th, 2024. The next Finance, Native Communities, and Tribal Governments Committee will be held on Monday, June 17th. It's a special meeting Monday, June 17th at 9:30 a.m., rescheduled because of the Juneteenth holiday. Thank you for attending. If there's no further business to come before the committee, we will adjourn. Hearing no further business, we are adjourned.
That's right.